Welcome, everyone. I'm Michael McDermott, a senior mortgage advisor with Ameritrust Mortgage, and today I'm going to show you how you can unlock more deals and close more business with non-QM loans. If you've ever had a client turned away by traditional lenders, this session will give you the tools to say yes when others say no. And over the next 20 minutes, we'll explore how bank statement loans, DSCR loans, and profit and loss only programs can help you capture more buyers, close more transactions, and grow your business in ways most realtors don't even realize are possible. Non-QM loans are true game changers. Traditional financing leaves out a huge segment of buyers, the self-employed, investors, and freelancers. But non-QM programs bring them back into play. Imagine being the realtor who can say yes when 3 other agents already told your client it wasn't possible. And by adding these tools to your arsenal, you gain the ability to close faster, serve more unique clients, and expand your reputation as the go-to agent for creative financing solutions. So let's talk about why this really matters in today's market. The number of self-employed Americans has been rising every single year. In fact, the gig economy alone represents more than 60 million workers. Traditional lending simply isn't built for them. Tax returns often don't reflect their real income. And when you can bring solutions to these buyers, you instantly differentiate yourself from competitors. And when you close deals faster, even with complex financials, you not only earn commission, but you build loyalty. And realtors who master non-QM lending don't just win deals, they build lasting client bases that drive repeat and referral business. So, what are non-QM loans? Simply put, they're mortgages that don't fit inside Fannie Mae's or Freddie Mac's strict guidelines. They aren't risky loans. They're flexible loans designed for buyers with non-traditional income. The most common types you'll see are bank statement loans, DSCR loans, profit and loss only loans, and foreign national programs. Each one is built to solve a specific problem that traditional lending cannot. Think of non-QM as the toolbox you need to serve clients who would otherwise be left behind. So let's get into the juicy part and explaining how these programs work. And first up is one of our most popular programs, the bank statement loans. And these are designed specifically for self-employed buyers who don't show their full income on tax returns. Instead of W-2s or tax returns, we use 12 or 24 months of bank statements to calculate income. That means your clients who run strong businesses but show low taxable income can still qualify for the homes that they deserve. We can go up to 90% loan to value, as low as FICO of 600, and loan amounts as high as $3 million to $4 million on exception. This product is a lifeline for entrepreneurs, and it opens the doors for you as their realtor. Now, who does this work for? The answer is simple. Nearly anyone self-employed. Contractors, hairstylists, photographers, Uber drivers, e-commerce sellers, personal trainers, landscapers, event planners, and of course, realtors. You can think of a self-employed business, you name it, it can be done. If they deposit money into a bank account every month, we can typically use it to qualify them. Think of all the clients you've met who say, my CPA writes everything off. I'll never qualify. With bank statement loans, that excuse disappears. You can step in as the realtor who brings them real solutions. So let's look at the market snapshot. Bank statement loans now make up 40% of all non-QM originations. That's 25 to 30 billion funded in 2024. This is up 35% year over year. Why? Because entrepreneurship and gig work are exploding. And here's the best part. Performance on these loans has been stellar. Credit loss rates since 2018 are only 0.02% across 150 billion securitized. That's lower than some conventional pools. The average loan amount sits around $550,000, which means buyers using these programs have 15 to 20% more purchasing power. And when you educate clients about this, you become the expert realtor for a massive underserved market. So let's go over a couple scenarios. In one scenario, there's a consultant and they deposit $40,000 monthly into the business account with a 20% expense factor. We can qualify them at $32,000 of monthly income. That's powerful buying power without touching a tax return. Another scenario, a restaurant owner deposits the same $40,000 monthly, but with a higher expense ratio factor of 50%. That still qualifies them at 20% income per month. And how these expense factor ratios work is our default is 50%, and we won't need any additional information if we just deduct 50% as our default. Now, if they want to go lower than 50%, we will need them to provide a CPA letter from their CPA that has reviewed their business to state that their business actually has a lower expense ratio factor. And these expense ratio factors can be anywhere from 40%, 30%, 20%, or in between all of those. It just needs to be verified by their CPA in a letter. And the other benefit to these bank statement loans are that the borrower can still go on writing off the income that the CPA can deduct so they pay less taxes. And these examples show how flexible and creative these programs are. And as a realtor, being able to confidently explain this to a client builds immediate trust and positions you as someone who understands how to get deals done. Next, let's talk about DSCR loans. This is known as a debt service coverage ratio loan. These are designed for investors, not homeowners. They qualify based on the property's rental income, not the borrower's personal income. No employment, no income verification, no debt to income ratios. If the rent covers the mortgage payment, the deal qualifies. That simplicity makes DSCR one of the most powerful tools for real estate investors. DSCR loans are built with flexibility. We can go as low as a 600 FICO and up to 85% loan to value. These loans work for both short-term rentals like Airbnbs and long-term tenants. What investors love most is that it is asset-based. It's about the property, not them. That means they can scale their portfolios without worrying about personal income documentation. And for realtors, this is an easy way to build relationships with investors and become their go-to agent for all future purchases. So let's take a look at the market snapshot. DSCR loans now make up about half of all non-QM securitized mortgages, up from just 22% in 2019. Over 150,000 DSCR loans have been originated to date, with demand doubling every year. And here's why it matters to you. 26% of single family homes are investor purchases. That's more than 1 in 4 homes. If you're not offering DSCR financing solutions, you're missing a massive opportunity to capture investor clients who buy again and again. So here are some simple examples to show you how it works. If a property rents for $2,000 a month and the mortgage payment is $2,000, that's a DSCR of 1 to 1, which qualifies. Another example, if rent is $2,500 and the mortgage is $2,000, that's a DSCR of 1.25%. Why it's important to note if they have a 1.25% is it actually gives them a better rate on the property. And the math is simple, and investors love that. As a realtor, all you need to know is that the property pays for itself and we can finance it. This gives you an easy way to say yes and build your reputation as an investor-friendly agent. And for our final product we'll go over today, let's look at profit and loss only loans. These are ideal for business owners who have clean profit and loss statements prepared by their CPA. Instead of bank statements or tax returns, we qualify them based on that P&L. We can go up to 85% loan to value with FICO scores as low as 660. This is especially helpful for businesses with seasonal or fluctuating income like landscapers or event companies. And it's a streamlined way to help your clients qualify with less paperwork. We sometimes will pivot from a bank statement loan to a profit and loss loan if we see something on their bank statement like too many overdraft fees, which will cause an issue with a bank statement loan. So why should you care as a realtor? Because these programs can literally grow your business. Think of all the leads you've had to let go in the past because financing didn't work out. Those dead deals with non-QM, they can turn into closed deals. And when you can help investors, self-employed buyers, and clients with unique situations, you become the agent who solves problems. That builds loyalty, gets you referrals, and sets you apart in a competitive market. Partnering with me means you'll never have to wonder what to do with a tough deal. We will find a solution together. So let's partner up. I'd love to review your pipeline with you one-on-one. You can bring me your tough deals, the clients other lenders turned away, and I'll show you how we can get them across the finish line. We're licensed in 42 states for business purpose loans and 36 states for QM loans. So no matter where your client is, chances are we can help. And together, we can scale your business by unlocking deals your competition doesn't even know how to approach. And a little bit about myself. I've been in the mortgage industry for over 15 years, and I have worked with the owner of this company for all 15 years of my career. And I will say we are a great company. Not only do we offer competitive rates, but we offer great service, and we know how to treat our real estate agents and their clients. My background is in both conventional lending and non-QM programs. And I built my business on relationships, integrity, and results. And what sets me apart is not just competitive pricing, but it's the ability to think strategically when deals get complex. My goal is simple. It's to help you win more business and build trust with you and your clients. So let's wrap this up with the big picture. Non-QM loans aren't just another product. They're a way to stand out as a realtor who gets tough deals done. And by partnering with me, you'll have access to solutions that open doors for clients who thought they had no chance. Think of the impact this can have: turning renters into homeowners, helping investors scale portfolios, and giving self-employed clients the buying power that they deserve. Every one of those success stories strengthens your reputation and your business. So here's my invitation. Let's connect. Let's review your pipeline. Let's walk through your current challenges and map out how non-QM programs can help you grow. I'm committed to not just being a lender, but a partner in your success. Reach out today and let's unlock more deals together. And I appreciate you for taking the time to watch this video and to educate yourselves on important information that could help you grow your business. So thank you, thank you, thank you. Have a beautiful day and many blessings to come.